Well, there are some positive signs with Canada's housing market, and here with more details, we have Frank Napolitano from Mortgage Brokers Ottawa. Good morning to you.
Good morning.
And the good news is people are defaulting on their mortgage less than before.
Which again, I mean, not surprising. In Canada, we've always believed, unlike the U.S., where in the U.S. they use it almost as they get to write off the interest. In Canada, you don't get to write off the interest. People are very loyal when it comes to their home, and they're very passionate about continuing to be homeowners. So, they'll give up going out to restaurants and stuff to make sure that they make their mortgage payments.
The expensive car to make sure they have a mortgage.
Yeah.
Okay, so this is a good sign.
It is really good sign because the risk level is already minimal. And, as a mortgage broker, I feel like we take too little risk, and clearly it shows, because when the delinquency rates are as low as they are in an environment where it's so expensive to live, again, it looks very good for the banks, but I still think that we're a little bit too tight when it comes to lending out on mortgages.
Do you think this will change the market at all?
Well, I think, obviously, I think the big concern for next year is that most people that have mortgages that locked in 5 years ago, their mortgage rate starts with a 1, and now it's going to go to a 3. So there's concern there that maybe those delinquency rates, and that's why when the banks report their earnings every year, you see that they're putting more and more aside for potential loan losses because they're fearful of this, but yet they were fearful of this in the beginning of 2025 as well, and yet here we are, our numbers are still low. So, but there's a little concern over it, but there's options. So again, I mean, don't get caught in the trap of starting to miss mortgage payments and giving control to the bank or your lender. There's ways to get ahead of it. So that's what I would suggest to many Canadians.
Can you give us some of those details on what people could do if they're worried that they're going to miss that payment?
Yeah, so first of all, if you bought a house and you bought it with less than 20% down, you have what's called default insurance. Many people know it as CMHC because they're the Crown Corporation, but they're CMHC, Sagen, and Canada Guarantee. All three of these default insurers have kind of little perks in place where if you lose your job, if for some reason you're just behind on everything, you can reach out to them. Number one, they'll tell you, reach out to your lender first. And if your lender doesn't give you the proper answer, then reach out to us, and then we'll communicate on your behalf with the lender. And what they do is they insure the mortgage so that the lender is not at risk, and they'll say, for the next 3 months, can you just let these people just make the interest payments only? So as a bank, you'll get your interest, but don't worry about the principal. So reduce their payments to give them an opportunity to catch up, because we don't want them to go into default. Now, if you bought your house or if you own your house and there's more than 20% down, so you don't have the default insurance, most banks and lenders have skip a payment options. And they're really intended for people that are maybe just tight. And we see it a lot around Christmas time in January, where people have really gone above and beyond with their expenditures. So reach out, but always do it before you get in arrears. It's hard to do it when you're in arrears. So if you feel like you're going to be tight on it, reach out to your bank and start having that conversation while your payments are up to date. Because once you get in arrears, much more difficult. Sometimes they put you on to a different department, and then you're not getting maybe the same results.
Perfect. Well, thank you so much for joining us today. And always nice to have some good signs in the housing situation in Canada.